Okay, well, let's start. I think it's about time. So hello, everyone. Welcome to another event from THUBA. THUBA is the abbreviation of Tsinghua University Student Blockchain Association. And this is your host, Brian Xiong from THUBA. 大家好，欢迎大家来到我们这个 another 这个 THUBA 的这个活动。THUBA 其实就是清华大学区块链学生区块链协会。然后我是你们的主持人 Brian Song。对，这个活动主要会是用英文去进行，所以整个接下来的时间我都会去用英文然后so today we're very fortunate to have Adrian, the CEO of Liquefy Labs, here with us to share his insights on the topic of DeFi and blockchain VCs. So we'll first go through the points in DeFi, and then in the second half of the event, we'll dive into the topic of blockchain VCs. And at last, we'll have a short Q&A session to conclude the event. So if you have any questions, feel free to post them in the chat box, and we'll go through them later during the Q&A sessions. 假如说你有任何问题在活动中可以把你的问题用中文、英文都行发到我们这个chat box 里面，然后我们在 Q&A 环节的时候，对，就是假如说用中文问的，我这边会翻译去提问他。对 ，So now I'm sure many of you have been waiting for this event. So let's just skip all the settings and jump straight to the event. Okay. So hi, Adrian. Thank you for being here tonight.
Hey, Brian.
So yeah, it's very nice to actually talk to you in person. So before I actually start you some questions, like why don't you first give us a self-introduction and maybe also an introduction to Liquefy Labs?
Sure. So I'll first give an introduction about my company and then probably a bit about myself. The
Sure.
company Liquefy, we started in 2018. Initially, for 1.5 years, we have been talking and working a lot on security tokens. So the main vision of the company is to democratize access to any financial products, whether it is liquid products like stocks, whether it's liquid products like private company shares. If you can invest in SpaceX shares before IPO, that's something that we have been very keen on for 3 years. So focusing on security tokens brought a lot of exposure among the institutions and also in the blockchain space. And since last year, it was a very good time for us to discover DeFi. We formed Liquefy Labs with the sole purpose is to incubate the best projects and also the amazing ideas in the DeFi space. So we have done several amazing projects, which has ride the great wave with the growth and on an explosion of the DeFi. There is project in synthetic asset area. There's project in AMM area, and also in data oracle as well, which I can explain more later. My personal background with before Liquefy, I was started from a traditional finance area. I was with a company called BlackRock. It's an asset manager when I graduated for 4 years before I really started my own company. That's kind of a brief background about myself.
Cool. Great. I think that's pretty interesting, especially in this DeFi world, all about, having synthetic assets as a new kind of a category for DeFi to explore besides those swaps and lendings. So yeah, I'm sure we'll dive a little bit deeper in the later questions. So, okay, so here comes the first question. This session will be about DeFi. So I'm sure a lot of people in this meeting right now, there are people who are new to DeFi. So would you mind give us an introduction to what exactly is DeFi?
I think in the simplest form, DeFi is a system where financial product become available on a public decentralized blockchain network, so that anyone can access to those products rather than going through middlemen like banks or brokerage. So before you might have to do in the simplest way, you have to go through banks to make transfer of payments from Hong Kong to US and whatnot. And now you can actually go through a decentralized protocol to do this without much fee, without much hustle as well, and obviously in a much faster way than before. And I think that's the basis of DeFi. It was started in 2017 with a lot of different protocols trying to solve existing issues in traditional finance, whether it's payment that I already mentioned, whether it is the access to financial products where Liquefy is very much focused on, whether it's to borrow monies in a more efficient way and also at a cheaper cost compared to traditional financial companies. So, but in terms of the various of sectors or various of verticals within DeFi, it always start from the base layer that people a lot of time discuss. And there was a huge explosion around different base layers over the past 12 months. And I call it the settlement layer, where Ethereum obviously is the base layer to settle transactions, whether it's for decentralized finance or for general purpose transactions. But we also see explosion of various blockchains such as Polkadot, Solana, where Solana is much more interesting from my perspective to process high frequency transactions because of the speed of the protocol. But there's also obviously similar to the internet age where the base layer is important, but what's more important is the explosion of applications that come after the base layer. Applications in terms of whether it's synthetic asset, whether it's lending and borrowing, whether it is exchanges, DEX, AMM layers, consumer-facing applications that really bridge the gap between traditional finance and the crypto crowd is what makes DeFi interesting. Because financial product has always been in I would say is a luxury items for developed market, while for the developing market, let's say Southeast Asia, it is even a luxury for someone to buy a Tesla stock. And how we can make it possible and accessible in crypto is what DeFi is being for.
Cool. Yeah, I think that's a pretty precise definition of DeFi, as in it's a very exciting area. It's from all the things that we know about the C5, which is a centralized finance, now migrating to DeFi with the base layer, like you said, the Ethereums, which makes a lot of cool things happening. Okay, cool. So why not jump to the next question then? So now we know about what's DeFi in an abstract term, in an abstract way. But so what specifically, what are some of the specific applications available in DeFi? So, or let's say, how do you categorize DeFi? And which one has a bigger potential in the future? And what kind of application can we expect in those categories?
Well, I think if we're looking at, first of all, for any students who are watching a video, if you want to learn more about the top protocols in DeFi, you can go to DeFi Pulse, just search it online for DeFi Pulse. So you can look at the toppers DeFi protocols. For me to categorize DeFi, there are two ways. The first way is really to divide DeFis in different sectors, mini sectors among DeFi. And the second way is really to define DeFis along the supply chain of the whole financial system. But looking at the first from a first perspective is I think there are several key areas. The first one is really about lending and borrowing sector. Basically, companies like Compound and AAVE, how they can enable lending and borrowing activities, as I mentioned, in a more efficient but a cheaper way. So meaning that everyone can go on the protocols like Compound to borrow money much faster than you have to process tons of different applications through banks. Also, obviously, at a cheaper way as well. And one way to do it is basically to do collateralize some of the ETH or some of the USDC or USDT that you already have to borrow money. So collateralized lending is a big part of DeFi. And why I say that is because it's basically bridge other areas as well. And with collateralized lending, it brings liquidity to the whole DeFi ecosystem, right? Because you borrow money to perform other financial activities, and such that that is also leverage, which in a good way it brings liquidity, in a bad way it brings leverage to the system, so it brings risk to the system. And the second, I think it is synthetic asset exchange, which is a very key area of development for me and also the company or overall the ecosystem space, because synthetic asset is defined as a price exposure to any kind of asset. And oftentimes, for example, on a Nasdaq or NYSE, or you go through a broker to trade stocks, you're often facing a settlement time issue. If you want to sell your US stock exposure, and you buy in a Hong Kong stock exposure, you actually need T+2. Even you go through Futu, you need to have the T+2 because that's the traditional legacy system that banking have. Synthetic asset just trade by definition synthetic exposure without having physical delivery, so that you could trade your S&P 500 index exposure directly to your NFT index exposure or to synthetic ETH exposure, essentially at a zero cost. And obviously that doesn't take into account the blockchain-based fee. But I think synthetic asset is a very key area where SNX, synthetics, Mira protocol, or even linear finance, where our company Incubate has strength in, is a very big area that I think there is a lot of potential that you could structure a lot of indexes and for anyone to trade seamlessly. But obviously, at the end of the day, the DeFi world has to be growing with TVL, and meaning total value locked, and the liquidity, and that will point to Uniswap as a decentralized exchange being a key area of development. As some of you might have basic knowledge, some of you might have more knowledge about what Uniswap is, but it's basically an exchange that you could trade with unlimited liquidity. This concept is never there in the traditional finance. In traditional finance, there's always a market maker required to enable liquidity. So Uniswap does that by having automated market maker, essentially AMM, that we were mentioning. I think there's going to be a key area of development because it's screening out, it's democratizing market makers. Everyone could be market makers. So that's sort of three areas that I think DeFi now has intensive growth and ultimately brings towards how we can also, besides just a product offering, how we can decentralize the operations of a DeFi, pointing to a DAO structures, decentralized autonomous organizations, and that is that is a much bigger thing than just DeFi. It's overall how to operate a company in a decentralized manner, and that's what excites me every day.
Cool. Yeah, definitely. I definitely agree with your categories into three huge spectrum, whereas all the TVL stuff, it's in the lending part where people have to deposit money in for the liquidity, and then we have synthetic assets, which that's something that decentralized finance version of synthetic assets can achieve a lot more than the centralized or just the traditional ones. Well, traditional ones aren't really synthetic assets. Those are just gold, like the products out there. And also like swaps, those are something as a decentralized exchange, has its own benefits and have its own strength compared to the centralized exchanges. And so yeah, I definitely agree with what you were saying, And okay, so I guess after this question, we can go on to the next one, is that will there be any new DeFi services or category that we can expect to be created in the future besides the three categories that you just mentioned?
So I think when the DeFi ecosystem was created, since probably May time last year, everyone is trying to mirror the existing financial infrastructure or the existing financial ecosystem and create that in a decentralized manner. But what being developed now is the existing financial infrastructure. But what lies ahead is actually something that we have never thought about. And thanks to the digitally native crypto token, now enable us to think of even more innovative solutions for DeFi. And one of that is I personally am very excited about is how we can have DeFi interacting with NFT, non-fungible tokens. And the reason for that is non-fungible tokens obviously give meanings to whether it's real life asset, less meanings from my perspective, but more meanings to digitally native items. So for example, you could make scarcity out of digital native art, and you can use that piece of art or a fraction of that to become a financial product in DeFi space. So think about that. I could create liquidity for trading a digital native art, whether it's on a absolute basis or from a fractional basis, and then we have that portion 1% of a digital art to be collateral in AAVE's ecosystem, right? And you would ask, what's the issue now that people are not doing that? Is basically that is not enough infrastructures or applications supporting that. Say, for example, if you want to put 1% of digital art into AAVE, you basically have to calculate the liquidation mechanisms for that particular collateral. And when you have the liquidation mechanisms, you have to have liquidation price. So who is the one pricing that digital art on a daily basis or even on a second basis that make things happen? So my excitement about NFT and DeFi that people really put in the thought process, I think it's going to grow big. Probably is also links to a traditional real asset market plus a new upcoming digital native items, which could bring in a lot of TVL for a DeFi. And the second, which excites me, is how we can bring off-chain data to DeFi. Because now, obviously, we talk a lot about on-chain settlement, on-chain transactions, talk about things like T+0, zero cost, but ultimately to bridge the traditional world in crypto, you also need traditional data, whether it's sourcing from Bloomberg, sourcing from elsewhere. Data oracle like Chainlink, they are able to source crypto-related data or commodities-related data from several sources and probably claiming in a safer way. But I think it's time for us to think about how we can consolidate off-chain data, but still synthesize those data in a safe way that could be used by DeFi protocol. And even how we can create on-chain prediction market for say real asset originated from offline data. So something that we are working on as a company is actually to create a collective intelligence model to predict prices for private company. So for example, SpaceX, can we have the daily updated pricing for SpaceX, and then allowing SpaceX shares to trade in the DeFi community with updated pricing per day. So basically acting equivalent to Bitcoin in terms of the trading mechanisms. So that's something that I'm very interested in as well. And also we are working on as well. Actually, we incubate a project called Lithium, and it was invested by Pantera just to work on off-chain data creation. And then something that is as boring but also important is how the institutional wave helped the growth of DeFi. Obviously, that goes to the DeFi fund. Grayscale has announced that they are doing a DeFi fund, and companies like JP Morgan, like Goldman Sachs, how they could create a so-called DeFi aggregator, the interface to connect the real dummies in traditional finance to DeFi products that we use. And arguably, companies like BlockFi is actually doing similar things. But ironically, they are not the most tech-savvy ones, but they probably are the most high-growth in the market because that help bridge some of the gaps that we see in the market.
Cool. Definitely, having those bridges will bring a lot of new users and even just rise up the TVLs on those DeFi projects. So it definitely will help a lot in the DeFi area. Cool. Okay. I guess next up we have a question about. You mentioned something about where the C5 where the traditional financial companies are trying to bridge the connections from DeFi to C5 users. So, well, we want to follow up with that question. I want to ask, what do you think of the future relations between DeFi and C5? Would you say they will completely go against each other or work together cohesively, or maybe in between those two extremes?
So I have a different answers at different stage of my career, my crypto career, and obviously, I mentioned about when I started Liquefy, I was actually focusing a lot on institutions, and obviously at that time, I would say that there would be synergies among DeFi and C5, and they could work together harmlessly, seamlessly, but that is basically bullshit at the end of the day. And I think the existence of DeFi is to replace C5. In certain ways, the saying of working together smoothly, closely is really for comforting C5s. But obviously, there is ways that C5 and DeFi could work together, but not to forget the primary objective of creating DeFi is to ease the access to financial products, or to ease the way that people could enjoy financial services. The only way that C5 could not be eliminated by DeFi is they start to adopt the trend, right? Something that I mentioned, even for banks, they could potentially aggregate, being an aggregator of DeFi, having an interface to connect DeFi to the customers. But I believe that if a C5 is very traditional and stay within their own comfort zone, but not really absorbing DeFi knowledge, they are going to be sacrificed, not sacrificed, but eliminated, and not too long later in probably 10 years, 5 years to 10 years time. So I personally, that my company has a very interesting background, that we are very deep into DeFi space with our Liquefy Labs domain, but at the same time, we actually have a traditional arm which face a lot of institutions. So I do talk to a lot of CEO board level from international asset managers or investment banks. I know they're looking into DeFi quite a lot. But that's being said, I don't think it's going to be non-competitive. It's going to be very competitive. Uniswap's trading volume is larger than Nasdaq, probably half of the last year, the last 12 months. So in reality, I think DeFi is going to be very competitive with CFIs, and if CFI is not going to adopt this, good luck.
Oh, okay. Cool. Okay, so you see CFI and DeFi in the future, as in DeFi will be the major trend, and CFI will kind of survive as the surface layer, as an aggregator for user to use it more easily. That's how you see it. Cool.
I would even think that DeFi could potentially acquire CFIs.
Sorry?
I could even think that DeFis could potentially acquire CFIs just to get the customers.
Wow. Cool. Okay. Those are actually quite a new opinions that I heard from anyone until now. Cool. Okay, I think that's pretty much it for the DeFi part. And I guess right now we'll move on to the second half of the event. So we'll come down and talk about topics of blockchain VCs. So as you know, especially in Tsinghua University, in my university, and there are a lot of students who are looking for blockchain VCs actually. And I also know there are actually a lot of blockchain VCs out there. So how would you categorize those blockchain VCs, and what are some of the indicators you will use to group them?
Well, I probably know a bit about this because first of all, Liquefy itself, we are not a VC because we have our balance sheet. We do not raise any money from investors to invest, but we actually invest in quite a lot of projects ourselves from a balance sheet perspective. And second, because whatever projects that incubate by Liquefy Labs are obviously invested by tons of VCs to support that synergistically. So from my experience, I would categorize blockchain VCs in the three type of VC. The first one is very branded in international type of VCs, usually American domicile type of VC. The second is really about VCs of exchanges. So the VC arm of exchanges. And the third one is community-driven investment vehicle. So community-driven investment vehicle. The first one for really international domicile VC, to point out some of the names such as Pantera, such as Polychain Capital in US, Mechanism Capital, some of the more branded names, I think probably equivalent to Goldman, JP in the traditional sector, traditional finance, as perceived by the crypto crowd, are those that you could get synergies from the portfolios that they have. So for example, if that VC invest in Uniswap, and you developing something that could have synergies with Uniswap, that VC could help you. They probably are more closer to the newer wave or the new things happening in the space that they could give you advice, right? How Wi-Fi, how Uniswap is trying to revamp by moving to Uniswap version 3, That's something that probably those type of VC can give you. And the second type of VC, exchange-related VCs, I think it is very straightforward. Being invested by the VCs help you to get future liquidity, potentially as a project, because tons of blockchain-related projects actually have their own tokens that you want to, in order to drive adoptions of your platform, you need your tokens to be liquid. So people buy the tokens in order to enjoy liquidity. So those type of VCs, very straightforward synergies just to get listed on those exchanges when they invest in you. And the third one, which I think is growing very interestingly, because for any community-driven VCs, they actually bring a lot of synergies, because not to forget that any projects in blockchain space, in crypto space, is that they want to decentralize. And when it decentralized, it means your target audience, your users are actually the crowd and the rest of the universe. And when you got support from a community to, as an investor, you get your first user base to use the product, people who believe in you from day one. So those three types of investors, I think it helps, at least for the project that we incubate. All of them have its own advantages, just to make sure that you meet the right investors.
Cool. Okay. Sure. All right. So next up, I have a question about what do you think is the difference between the blockchain VCs compared to the traditional VCs?
Well, I can't answer for others, but I can answer from my perspective, because I actually got a venture. I'm investing in traditional companies as well, mainly in late stage companies like Epic Games, SpaceX. I actually invest in Kraken as well, in other crypto data labs.
Oh, okay.
But also the crypto or blockchain side of VCs, investing more in tokens and very early stage opportunities. The main difference that I see is the way the criteria to judge a founder is very different across traditional and crypto and blockchain based VC. So I'll talk about why and the rationale. The main reason is the expectations of the exit or of the timing of the cycle is different across traditional and crypto. So traditional side, when you invest in one thing, you expect that investment to take off probably 8 to 10 years. You got an IPO, if not you fail, you got acquired. You got a lot of patience for those founders. So meaning you look into someone which have a very long-term vision and really believer in the sector. In crypto and in blockchain space, the cycle runs for probably 2 to 3 years every time, and probably shorter every time a bull and bear market happens. So meaning that if the bear market is now, the bear market should be shorter than the last bear market, because the cycle growth getting shorter and shorter, and that's what make an industry more mature. You don't take a 3-year cycle anymore. And with that, usually a VC investor in crypto space, they look at things more, I wouldn't say short term, but more dynamically. So they look at founder who is very flexible in terms to make changes. So it proven from something like Synthetics. Synthetics was called Haven Network in 2016 and 17, and they were a stablecoin protocol. And the founders were able to think about how stablecoins is actually beneficial or is a driver for trading synthetic products, and they change the synthetics. And you seldom see that happens in traditional space, such that you wouldn't find out Zoom suddenly become Uber and in a space. So VC investors in crypto space look at individuals from how flexible they are able to make changes in crypto. And you have to be fast enough. And sometimes even you're fast enough to make changes, you'll be successful. In a traditional space, you really look for a systematic approach to grow a company. So I think that's a key difference, how to judge founders. And the second difference is also there is much more to look at for a crypto VCs, besides the business model, how you get a profit, is basically the token economy itself. It's something very different from traditional sector. game theory is the basis of making crypto successful. The reason Bitcoin is being successful is because miners are being rewarded because of proof of work. And Ethereum is being successful and slightly now when they, I think it's about a whole proof of work to proof of stake mechanisms. But Ethereum is being successful because in every applications, people are being rewarded in certain ways. You get a monetized incentive. So for any crypto VCs, they have to justify to the investment team why people use the product, use a DeFi product. When it is decentralized, it got to be incentive for every individual. And that is proven by A16, even Silicon Valley VC, they actually have to hire from the crypto space for anyone to look at the crypto space, but not a traditional crowd. And even for family offices who is going to deep dive into crypto space, they basically have to hire someone from the space instead of going someone from traditional because it's too different.
I see. I see the clear difference now. Cool. Okay. So next up, we have a question for personal, well, let's say for whoever's doing a blockchain startup here. So how do you make a proper, reasonable evaluation of your own blockchain company?
Blockchain company's valuation is not reasonable for any one of them. Even though I'm in this industry, I can tell you, my friends' companies, those that big names, none of them valuation makes sense. If you look at Coinbase, it doesn't make sense. Okay. But that's normal because I think blockchain companies or in general crypto companies, I would think it's like a 1998 internet stage. Every companies grow exponentially because that's just a new market. To do valuation under these circumstances, meaning that in the irrational valuations market, in particular because I was from traditional asset managers, I look at a lot of different ways to value companies. All you can do is not DCF. You're not going to do a discount cash flow for any of these companies. Even investment banks will try to tell you that he runs analysis to price Coinbase at $50 billion is just bullshit. It's all about peers competitive analysis. It's all about looking at which company, Coinbase did $80 billion, probably starting from $67 billion and then rise to $80 billion valuations. That's why Kraken should be traded at half of that. Wow. It's all about peer valuations. And what the bad thing about that is if it's go overvalued and it's going to be happening like 2000, the internet bubble, everything collapse at the same time. But that's required because market needs to have the pricing discovery for these unicorn companies. And I was just looking at the news right before this session. OpenSea started for 1-2 years, 18 months, 12 months. It was like $1.2 billion now valuations. And looking at whatever traditional sectors in tech, none of that could be valued at a high price. It also means that investors believe a lot in this sector. But other than that, peer valuations, I don't think you could do any cross industries comparison as well, as I mentioned, because crypto has its own dynamics, not just about a business model. It's not about comparing the revenue stream, but comparing the game theory and how each users can get incentive out of the ecosystem. And that's going to be a new way to evaluate, which I personally haven't found out yet.
Oh, I see. So we're still on this early stage on discovering the pricing mechanism of the companies. I see. Okay. So follow up, let's say if someone just decided to put a relatively reasonable evaluation of their own company, and then they start to reach out to VC. So what do you think is the most polite way or just the elegant way to contact VC? Or if I ask more directly, it's like, what kind of approaching messages will draw your attention?
Definitely buy me a drink. I'll bring you every introductions. Well, I think it is very important for anyone to, as a project, is always important to have that three-liners, not three-liners, but three paragraphs. And I think it is not, irrespective of crypto or not, it's always the most difficult part to condense your company's visions, what you do, the team itself into 3 paragraphs. And I have, and some people might think it's dumb, but one of my mentees actually used the same way. Go online and search for what Mark Cuban's like for emails. He just used that way to cold email to Mark Cuban, and he replied. So it's really about how you put effort into the messaging in such 100 words of your company. But obviously that is bullshit for a lot of people. So in practical ways, it's really for making introductions. I never look at a project which is not introduced by someone. So we receive a lot of cold emails. Reality is I never look at that. I really have to rely on someone that I trust to make the introductions, because it's not that we are rude, it's just because there are tons of things to do in crypto. It's crazy 24/7. So I believe that introduction don't have to really made from anyone senior. It's just as long as someone that VCs knows, you can get that happen, and then the rest will really lies on how good yourself are and the project as well.
Awesome. Well, I guess getting through the trusting barrier, that will be the huge help, by having someone referring those.
Alcohol helps, yeah.
Okay, alcohol helps. All right. Buy you a drink sometime, people. All right. So then now follow up, you were mentioning, if once you're connected, you'll actually start looking at, their team and their projects. So what does VC pay attention to the most when reviewing a startup team members?
Well, I think it is, if you're looking at just the blockchain space, and it depends on what kind of projects you are. If you're creating something, say a privacy layer on Solana, first of all, it is really about technical driven. And I look at the founders from, say, do they know Rust? Do they know Solidity? Is the really basic language of to write on Solana? And there's already very rare in the market that someone know how to write Rust in terms of coding language. So that is probably depends. If your project is a very technical project, I'll look at a CTO first and the background. And it's more about the coding experience, the GitHub, instead of the track record they have, because I don't think a lot of tech developers were successful in the industry, because the industry is just in a baby phase, right? Baby phase. And then if you are very application driven, particular for NFT projects, then it's really less tech savvy, but more about the vision of the company. And then we will look at the CEO, obviously. And if you're usually looking at a business lead or a CEO, is really about track record, about what they have done before. And not necessarily they have to be successful before, but due diligence about the projects they did before. Why did it fail? Why was it considered a scam? But then a lot of times, one key difference I haven't mentioned for a crypto project versus traditional project is seldom do investors look at their dynamics. Seldom does investors look at the interactions, the so-called teamwork among founders, because in crypto space, people expected to work in silo very independently. And I actually haven't heard a lot about arguments among founders in crypto as well. Probably they don't have the time to argue to work on the project. So that's sort of what I would look at, really tech savvy projects and the founders' track record if they are working on a very application-driven project.
I see. Cool. I think those are relatively pretty good answers. Okay, so I think that's pretty much it for the second half as well. But before we go on to the Q&A session, I've actually collected some questions from our community. So this question is actually 3 in series, so I'll ask one by one. So from a long-term perspective, would there be any competition between Uniswap and AAVE?
Well, I think AAVE and Uniswap are doing different things in the market, and obviously, I will first answer how different they are, and then long-term whether there's a competition. So Uniswap obviously provide liquidity for different trading pairs on the platform. Their AMM, their DEX, their volume transaction is the largest at present. AAVE support borrowing and lending activities. You as a user, you can deposit anything collateralized borrow monies from AAVE at an interest rate, a fixed interest rate. You can do flash loan, for example. But there's a reason for that to be having long-term competition, because the whole DeFi space is competing in one thing, which is the TVL, the total value lock. Whichever protocols have more ETH or USDC equivalent or any stablecoin equivalent sticked in the protocol, or the native token sticked, you could generate fee as a protocol out of the transaction activity. So Uniswap and AAVE are probably competing in the TVL game instead of the product offerings. I don't think Uniswap is going to touch on lending and borrowing. I don't think AAVE is going to touch on the AMM, at least even in long term. I don't think they will try and do that, because it's about composable instead of trying to do everything in DeFi space. But in terms of the TVL space, it's really have to deep dive into both projects, how they get a fee, right? Uniswap, if not the project getting a fee, but how a user can be incentivized to use that particular product. So in Uniswap, I can go on Uniswap and I can inject liquidity. I can enjoy a split of the trading fee. That's sort of why I would inject liquidity into Uniswap. For AAVE, I collateralize my stuff on AAVE. I could get a fixed or sometimes variable yield out of AAVE. So it's really about the diversity of trading pair of Uniswap, the number of trading pair in Uniswap, and also along with the 3.0, how they can minimize the slippage for Uniswap and potentially impairment loss, versus on AAVE, how much yield I could get out of the different type of products when I collateralize. Potentially in the future, I can collateralize digital art, as I mentioned on AAVE. I could take probably 12% yield, and that will be the competitions of TVL. So ultimately, for Uniswap, I think they have to along to the improvement in their protocol, and there's a lot of issues for AMM, whether I mentioned about slippage or impairment loss. They have to improve on that. While for AAVE is they have to improve in terms of the diversities of products, able to be collateralized or able to be lent out or borrowed, such that a different range of yield could be offered to users, and they could compete on those, the TVLs. But I don't think the product will be directly in competitions.
I see. So in general term, under my understanding, so user, whoever gives a more preferable yield, the user is more likely to deposit the money in that place. Besides, there's imperial loss in indexes.
Yep.
But yeah, definitely user will choose the one who gives them more money, right? Okay, cool. So the next question in this series, so from a midterm perspective, I don't know if I'm translating it right, but it's like there's long term, then there's midterm, and then short term, right? So in the midterm perspective, do you think that DeFi projects that are doing asset management will have a huge surge in TVL?
I hope they will be successful in midterm. I hope the kind of the decentralized protocol for asset management will be successful in midterm. But why I say that is because I also have worries about these protocols, because they were proven not to being so successful over the past 6 months, and some become really successful with DAO-driven asset management, but those are not really asset management, like YFI thought as well, are basically automated asset management. For something like DHedge, which is built on synthetics, they don't really have a lot of trading volume for DHedge. Even you could be like eToro, you could follow someone else's trading strategies. Reason for that is because I think even though how much DeFi grow for the past 12 months, not to, let's don't forget that is still in the baby phase. Asset management, if you looking back at the traditional finance sector, asset managers actually grow at a later stage compared to investment banks. When Americas walk out from the depression, it was investment banks taking a lead. You heard about names about the first Boston, which is the previous Credit Suisse, JP Morgan, Goldman Sachs, in 60s to 80s, growing as the bigger financial institutions, where asset managers like BlackRock came out in 1990s. What does that mean? It means that the initial building of a financial ecosystem starts from investment bank driven stuff, which is a lot of times lending, borrowing, leverage, exchange, because market maker is something that investment bank does. Asset management often comes in after the financial ecosystem becomes more vibrant. So I think asset management will be having a TBR explosion, but not now. It's just too early stage to talk about asset management when liquidity itself is sometimes luxury for users at a high fee, and not to mention about the base layer is very super expensive to use now on Ethereum. So structuring a product, a portfolio on Ethereum gets not.
Okay, I see. So the market is still not ready. And maybe with the adoption of layer 2 and so on with Polygon or even Arbitrum, then let's hope that this midterm will happen very soon. Okay, cool. Now you know what to expect. Here comes the short-term perspective. So would there be any all-in-one style DeFi platforms appear in the market? Because as we know, Sushi recently has also announced, before they were like swap platforms, but right now they also included a lending functionalities in their platform. So can we expect those all-in-one style DeFi platforms?
I think there will be all-in-one DeFi platforms. I'm not saying that it's good for the industry. I think it's actually quite bad for the industry because I think that's the role for institutions, not for someone like Sushi, because when Sushi, no, Uniswap, AAVE in their own vertical, Sushi, Uniswap in their own vertical, AAVE and Compound own vertical, SNX Linear own vertical. At the early stage of crypto, they should be doing their own stuff instead of trying to conquer the other areas. And I think that was what YFI did. They kind of acquire meaning buying out tokens, projects, and then trying to be a conglomerate in DeFi space. I think projects are just too greedy before they do the things right. And also because supposedly in DeFi space or any crypto space, you need to be composable. You want to work with other projects to create a conglomerate instead of buying out all the other projects. I think it's just adopting a traditional mentality of M&A in crypto, which doesn't necessarily work out. I think it will happen for an all-in-one DeFi platform, meaning the platform is going to be slightly more centralized than other projects trying to work together in a composable way. Because you think about if YFI buying out all the other protocols is basically meaning Andrew is the guy for all of the whole all-in-one platform. Is it good for a DeFi? I don't think it is, but we need to walk through that necessary path for people to realize the mistake, and that's what I think.
Okay. Cool. Okay, so then we also have two more questions. So what are some of the areas that Liquefy is interested in investing or doing research or looking out for?
So we now we are very interested in NFT space, but we are in the very exploratory route. We did a lead investment in the first social media platform Solana, and it's called Only One. It was then there was and then follow-on investment by Alameda Research as well, what I have for the platform. We're looking at quite a lot of NFT projects now, but in a deeper way. So it's sort of the thesis and the reasoning they're using NFT instead of just being NFT per se. We are very interested in any DeFi project that is supporting the adoption of real asset. So even though ourselves incubate several of them, but any project that is trying to bring offline asset to crypto is something that we really look at a lot, because I think the global private market or traditional market from $150 trillion to $200 trillion is a much bigger market than the native crypto market. So that is something that we're looking at as well.
Okay. And next up, I also have another question. So this is actually my personal question, is that because you mentioned something about, you're interested in like, as in DeFi, like off-chain data creation. So what exactly is that? And then would you mind give us a more more explanation to that? And then what are some of the applications with that too?
So that is, yeah, I probably haven't explained well for that question. So when I say data creation, not that data creation, but when I mention about offline data, there's actually two parts of that. So first is how we can create, and I'll use private company as an example, how we can create data that didn't exist before. So for example, for private company, how do we evaluate private companies now is basically based on the previous round valuation. So if you think about SpaceX, the latest valuation is the latest round. So I think it's around 80 or 70-ish billion dollars. But in the broker market, when a lot of OTC transaction happen, people actually reckon that SpaceX is already over $100 billion. And those are data that you wouldn't find out day to day because it's in a very intransparent circle. Unlike the stock market is very transparent in terms of stock prices. So first of all, to create those data, it means that how we can get daily, weekly, or monthly updated pricing for a private company. Think about that way, because a private company will become liquid as long as there's updated pricing. I mentioned that we can use collective intelligence to incentivize expert. I'm not just saying brokers, but probably you, the students on the call as well, they might have their own feeling around what SpaceX should be valued at, because you love Elon Musk, you think it should be at $500 billion. There's nothing harmful that, because at the end of the day, it's about a market. The market decisions to decide. So you jump in on a hypothetical protocol and say, I want to evaluate SpaceX at $500 billion. And you are being rewarded if you get a close answer to a so-called ground truth. But I'm not going to explain what ground truth is. Then you create new kind of data, updated pricing data for SpaceX on a daily basis. That's the kind of creations of offline data of offline asset. You're no longer just sourcing Bitcoins, Ethers data. And then when you create, in an ideal world, you have a on second basis updated data of SpaceX. Can you be a chain link equivalent, a data oracle, to provide those data to applications such as AAVE? As I mentioned, lending and borrowing activities, now I use SpaceX shares as collateral on AAVE. And what happens is when SpaceX price drop a lot, your collateral will liquidate. And you kind of, as a borrower, you lose your collateral and you have to replenish your collateral. And why is it important to have a daily pricing update for SpaceX? Because if you don't have that, how could AAVE as a protocol determine the liquidation mechanisms? Because they have to see that SpaceX drop from here, rise to there in a timely manner, instead of going through on a yearly basis. So my interest in offline data creation, or the real asset data creation, is to bring a whole new universe of real asset in DeFi. And there's nothing being done at this stage. And anyone who can do that, I would fund him.
Okay. Well, I hope everyone heard out his announcement. Maybe you should start one of those projects. Okay, cool. I think those were the questions that I actually prepared before the event. And right now we will jump into the Q&A session. So if anyone have questions, feel free to ask right now, or you can just turn on your mic to ask, or you can also type your questions in the chat box. Okay, I guess for now they don't have many questions. Maybe we covered all of them.
So I'll put on the careers at liquefy.com on the chat box. We are constantly hiring for talents, whether it's in the BD, in the business side, marketing, whether it's a tech side, all talents are welcome. So if you're interested, look through our website, look through the projects that we work on, send us a resume.
Cool. Yeah, that is more than welcome. Liquefy is definitely one of the best speaker I've ever had events with. He has especially Adrian, he has a really, really good insights in DeFi that I actually learned so much about today. And yeah, I guess right now they don't have many questions. I mean, we actually covered a lot. It's an hour long event. So, and also you answered pretty well. So I think that should be it for today's event. And well, I just want to say, we THUBA really thank you for coming to give us a lecture about the DeFi and also the blockchain VCs. And then I'm sure after we post this video on YouTube, there's going to be more people reaching out to you. So hopefully this will help you in terms as well. So thank you for giving us this lecture, Adrian. And thank you for everyone who joining this event today. Thank you.
Thanks, Brian. Cheers.
All right. Bye, guys.